Is the stock market top coming soon? We're going to talk about some catalysts that could unravel this stock market rally, or is this going to be nothing more than a bear trap that sends the bears hibernating for the rest of the year? Now, as we look at this bearish rising wedge for the S&P 500, notice the fear and greed index is almost back into extreme greed territory. We saw it in the extreme greed intraday several times this past week. Then we look at the most recent investor sentiment survey. Look, the bears are essentially non-existent. Have the bears already gone into hibernation? Now, on Friday, when we look at the economic data that came out, and more specifically, the 10 o'clock news items, pay attention to consumer sentiment and inflation expectations. Both of them were huge misses out there. We saw consumer sentiment drop to 68.9 with a forecast of 70.9. Inflation expectations came in at 2.9, previously 2.7. Now, I want you guys to pay attention to this graph right here. Now, in the dark, solid black line, year ahead inflation expectations. But in the red line, notice it's the percent of consumers citing high prices for worse personal finances. Now, I know what you're saying, Mike, there's nothing to worry about. Jay Powell has assured us that he is going to orchestrate this soft landing. On Friday, we saw Tesla absolutely getting crushed, down 8.78%. Has a large gap to the downside. Now, during the live streams last week, we talked about this potentially being a bear flag pattern, and now we've had the resolution to the downside. But if we look at the candle structure on Friday, notice basically a spinning top candle. We have a wick on the top, wick on the bottom. However, a caveat, there is a huge gap right above us. Now, can Tesla potentially start to rally back towards 229.20? Now, if Tesla and AVGO, which struggled a little bit on Friday as well, can start to turn the corner a little bit, with NVIDIA also continuing to show strength, maybe the NASDAQ can start to play catch up. And what I mean by that is, look at the NASDAQ. This is either going to be a double top, or this is going to be an ABC pattern on the way up with a completion point all the way up here at about 522. Keep in mind, though, we are still in the midst of this first ABC pattern on the way up, which completes somewhere in the ballpark of 510.33. Now, you might say, Mike, that seems bullish. That does not seem like the stock market is about to top out. This past week, we saw the SPY making new all-time highs. However, when we look at the lower pan, the HYG high yield bonds, notice they are not following suit. So while the SPY was making new all-time highs this week, HYG was starting to lag back a bit. Then as we come over and look at the Dow Jones, notice this past week, Dow Jones ring the ticker tape, hooray, new all-time highs. But then look at the Dow theory sell signal, meaning the transportation index is not following suit. However, the transportations have been able to break out of this declining trend line for the moment. We'll see if it starts to head back lower and start to go back lower, or will the transports finally start to play catch up. Now, when we come over and look at the yield curve, notice we've uninverted. Then we started to pull back here just a bit. Now the red line, we get back below it. The yield curve will once again be inverted. However, look, we're starting to get a steepening of the yield curve at this moment. And that's normally when bad things happen in the stock market. Now, this past Thursday, we had the weekly unemployment claims come in at 258,000 new filings. However, the forecast was 231, previously 225. Now, why is that a problem? Well, we see right here, Boeing to cut 17,000 jobs as losses deepen during factory strike. Now, keep in mind, Jay Powell keeps saying, you know what? Everything is fine. Come on in. The water is warm. There is nothing to worry about. If more and more companies start to lay off, that is going to be a major problem that Jay Powell and the Fed are not going to be able to stop. And we already know at the last FOMC meeting, Jay Powell cut rates by 50 basis points. And earlier on, the market was priced in that the Fed was going to cut rates by another 50 basis points. However, now the odds have flipped. There's an 89.5% chance at the next FOMC meeting, Jay Powell is only going to cut rates by 25 basis points. Now, let's turn our attention real quick over to the HSI, the Hang Seng Index. Notice in a matter of 16 trading days, it was able to rally 37%. Now, why was that going to be the case? It was all about stimulus. Then we learned over the weekend, China flags more fiscal stimulus for economy, leaves out key details on size. Now, why is China trying to stimulate their economy so much? Well, we already know it is very, very clear China has a major problem with their economy. And you know what? It's only a matter of time before it comes over here and we're going to be dealing with the same madness. We've already seen the Fed capitulate and start aggressively cutting rates. Now, after watching the Dow and S&P 500 hit new all-time highs on Friday, there's still one big major catalyst that could essentially derail the rally. And that is basically, what is Israel going to do? Are they going to retaliate? Are they not? Is it going to cause more escalation in the Middle East? And if there is more escalation in the Middle East, you know what? The crude oil bulls are going to be getting paid handsomely. We've already seen crude oil come all the way up, completing a ABC pattern on the way down, came down, hit our price target to the downside, and now is on the way back up. If crude oil can breach above the swing high right up here at about 78.49, keep in mind, we have another ABC structure to the upside at about 83.12. Now, I think crude oil's prices going substantially higher from here is all going to hinge on the Middle East. Me personally, I think economies around the world are slowing down, so crude oil has a demand issue. However, the problem in the Middle East can overtake any of the demand issues that we may be facing at this time. Now, I want to give you guys a friendly reminder. If you guys trade with Apex, My Funded Futures, or Fast Track Trading, and you want to support the channel, use my affiliate links in the description box down below. Not only will you get the deepest discount out there, but it's another way you can support the channel for no additional cost. Now, as we look at the economic calendar for Monday, notice the US and Canada both have a bank holiday. The bank holiday is Columbus, so you're probably asking yourself, are the stock markets open on Monday for Columbus Day? Now, we scroll down through this article. Next Monday, October 14th, is Columbus Day, a federal holiday. Stock and bond markets typically follow the federal holiday schedule, but the New York Stock Exchange and NASDAQ will operate normal hours on Monday. However, the bond markets will be closed. And if you trade the futures markets, we come over to the CME group, notice we do not see Columbus Day on the calendar. So that means futures markets will be trading at normal times as well. Now, as we flip back over and look at the calendar real quick, what else do you guys also notice about this week? If you guys said this week is the third Friday of the month, which means it's OPEX, you are absolutely correct. Now, will that go ahead and be a changing of the guard, meaning that the buyers will now go ahead and say, you know what? Take all their profits, and now the bears are going to come back in and feast and send the markets lower? Or are we going to see all the FOMO traders jumping in and pushing stocks continually to make a new all-time highs with the S&P 500 on its way to 6,000? So when we come over and look at this graph real quick, brought to us by Almanac Trader, notice, what do we normally see in this time period, meaning the beginning of this week? We see a little bit of chop. Then going into the 18th, we see a little bit of a rally, and then we dip in towards the end of the month. Then we start to rally back up. Now, this chart right here coincides very well with a stat that I shared with you guys last week that showed that anytime the market has been up 10% or more from January through September, that normally between October 7th and the 15th was not very bullish for the S&P 500. We were only up 4 out of the last 14 times and down 10 of those occurrences. However, when we look at the S&P 500, it looks like somebody forgot to give the S&P 500 the memo that you're supposed to have a period of weakness out here. Now, if we come over real quick and we look at the economic calendar for this week, we already talked about Monday being a bank holiday. However, at 9 a.m., we do have Kashkari speaking. Waller's going to be speaking at 3 p.m. Then after the market closes, Kashkari will be speaking again. Then we come over and look at Tuesday. What do we have on deck? We have the Empire State Manufacturing coming in at 8:30, followed by a few FOMC members speaking throughout the day. Then on Wednesday, we have no major economic to report of. Then on Thursday, we have core retail sales coming out, retail sales month over month, the weekly unemployment claims, the Philly Fed Manufacturing Index. And I want you guys to pay attention. Notice we are expected to have another high reading of 241,000 new filings for unemployment benefits. Now, we do have some other light economic news coming out throughout the duration of the day. Then we come over and look at Friday. We have building permits, housing starts. Then Waller's going to be speaking at 12:10 p.m., followed by the Treasury currency report. I hate the news articles when they come out and say tentative. Basically, on Friday, we kicked off earnings season. We saw JP Morgan and a lot of the banks absolutely rocketing to the moon. And speaking of earnings, now this week, we have earnings coming out. We have a slew of earnings on Thursday. We have Taiwan Semiconductors. We have Netflix, just to name a few. And we look at the expected big movers out there. We can see Netflix expected to move plus or minus 8% on Thursday. Even Discover is going to be about 7.5% on Wednesday. ASML plus or minus 7% on the session. So as we were kicking off earnings seasons, we need to pay very close attention pre-market and after hours as well. Now, as we come over and look at the dollar index real quick, we can see over the past couple weeks, the dollar index has had a strong push. We've been able to reclaim this structure breakdown point. Are we getting ready to head up a little bit higher to about 103.62, which would be the next structure breakdown point? Now, on Thursday, we had a doji candle, and on Friday, basically a spinning top type of candle. And we're going to see, do we start to see some escalation over in the Middle East? Do we see uncertainty starting to set in? And then we look at gold. Gold had a big move up on Friday where gold was up 37 points on the session. Now, keep in mind, all-time highs on gold is right up here at 2709-ish. And if we see this, this could be nothing more than an ABC pattern on the way up. If the all-time high gets broken, the next target I'll be watching is going to be 2782.30. However, if we start breaking back below the swing low at 2619, watch out. We're probably coming all the way back down towards this little structure breakout point, somewhere in the ballpark of 2570, possibly all the way down here towards 2545, which would be this high volume area on the composite profile. Now, as we come over and look at the S&P 500, this SPY out here on the weekly chart, notice we have this ABC pattern on the way up. Now, the price completion somewhere in the ballpark of 592. And if we look at the candle, we closed in the upper third of the range. We have a very, very tiny, itty bitty little wick to the upside. We have a much larger wick to the downside. Now, if we look at the candle counts, we've had 1, 2, 3, 4, 5 consecutive up weeks in a row. Now, does that guarantee that we're going to have 6 or that 6 is going to actually be a down week in the market? It does not. The MACD indicator is not confirming these highs at this moment either. Then on the daily chart, you can also see that on Friday, we closed very close towards all-time highs. Now, when we look at this, we can see that ABC pattern right up here that we mapped out on the weekly chart. But we can also say that we have an ABC pattern on the way up now. We've already been able to take the high, and that gives us a price completion somewhere around 600.70. Now, we look at the 4-hour chart, we do see we have a bullish across the MACD lines. However, look how high the MACD indicator was in correlations with the swing high over here. As we've been able to push to new all-time highs, the MACD indicator at this moment is not confirming those new highs. On the 1-hour chart, looks like the MACD indicator wants to start rolling over, and I would make the case that we have divergence. Yes, the MACD indicator is at the same level, but notice price has continued to go higher. Then when we dive down, we look at this on the 30-minute chart. Here's a little support zone that we've had down here. We're able to break up and out. Now, when we come over and we look at this for next week, I will be watching this minus development area down here, somewhere in the ballpark. We're going to call it anywhere from 577.52 up here to about 578.17. Now, the first time we come into it, expect a consolidation or a slight bounce up. Then if we come down a second or third time, that's when I would expect that level to potentially get busted. And let's not forget, we still have gaps to the downside. Now, when we come over and look at the futures markets, notice out here on the 4-hour chart, the last two 4-hour candles, big selling tails on top of those candles. And as I'm looking at the profile structure from Friday, I'm kind of watching this minus development area. Now, do we just simply blitz right through that area? And what I will say is if Israel goes on the offensive, we're likely going to go substantially lower. Now, this first area is going to be the first area I'm going to be watching anywhere from about 58.48 down here to about 58.46. Now, the next level below that, I'm really want to watch this minus development area down here, about 58.08. Now, as we come over and take a look at the weekly volume profile levels, keep in mind, value area high comes in at 58.67.75. We have the point of control down here at 58.31.25, with value area low being down here at 57.86.75. Now, I want to bring something to your attention. We talked about this Friday during the live stream, and we basically were building this confluence zone. What I did was I grabbed the Fibonacci retracement tool, swing low up here to the swing high. Now, after we've done that, I also measure for an A to B equals C to D pattern like this. And notice right where we came down to. We came in right between the 50 and the 100% ABC pattern completion. Then the market rallied back up, making another new all-time highs. And that's why it's important. Don't just look for one signal, look for multiple signals at an area on the chart. And if you guys want to make sure you don't miss my next live stream, make sure you're subscribed and you have the bell notifications turned on for all. Now, when we come over and look at the daily profiles, notice the shape of the profile. I'm going to classify this as a P as in Paul. And what this is going to signify to me is if we break below value area low, we're likely going to explore the lower third of the range. I'm going to show you guys exactly where I'm going to be looking to target. And that's going to be this little bit of a minus development area to the downside from about 58.29 to about 58.27. That's going to be my target location if we break below value area low at 58.50. Now, the point of control will come in at 58.60 and value area high is going to be 58.66. Now, one thing to note, if we start breaking below value area low, and here's the level we drew out off the weekly profiles as well, then we start to basically firm up from this area. If we get back above value area low, then I'll go ahead and reverse, start looking to target the point of control, value area high, and hold on and see, can we make a run to new all-time highs? Now, as we come over and look at the NASDAQ, more specifically the QQQs, notice, what do we have? Well, we still have this ABC pattern intact. The price completion is going to be up here about 510.33. And notice we're closing near the upper third of the range. As we dive down and start looking at the daily chart, we can make the case that this is either going to be a double top pattern or this is going to be an ABC pattern completion, which will bring us up towards about 522. Then as we dive down, look at the 4-hour chart, not a lot to see on that time frame. Then on the 1-hour chart, notice MACD indicator is creeping down towards the zero line, but for all intents and purposes, this has been nothing more than an upper level consolidation that essentially could resolve itself substantially lower. As we look out here on the 30-minute chart, notice the last 3 days, we've been basically just bouncing, consolidating up here at these levels. Now, does that mean distribution is about to take place and we're going to see a pullback in the market? Well, not so quick. Now, I know what you're thinking. Well, Mike, we have this large gap to the downside, which we do. And at some point, we will come back and fill it. Now, maybe it's going to be this week. Maybe it's not. And even if we come back and fill that gap, I still don't think that goes ahead and destroys the context of this bullish market. Now, as we come over and look at the futures markets real quick, notice what we have, a big push up, consolidation. Now, is this going to be a bull flag pattern or do we start to resolve back to the downside? Now, as I'm looking at the profile, notice value area high is going to come in at 20,487.50. We have the point of control up here at 20,436.50 with value area low being down here at 20,214.50. Now, one of the areas I am going to be watching this week, and I don't know if we make it down here or not, is going to be this minus development area, which comes in at about 20,054 to about 20,022. Now, before I'm going to go ahead and focus on this area, I want to see one of two things. Either we start breaking below value area low, or we can break above value area high and then we start coming back down, or maybe, just maybe, we can get an earlier entry into that particular trade using the daily profiles where value area low comes in at 20,405.50. The point of control will be 20,440.00 with value area high being 20,485.00. Now, when we look at this, if we can break below value area low, then what I'm really looking for is see, okay, can we go back and try to retest the lows out here from Friday? Then anything below that price point, that's where I really want to hold on and see, okay, can we make it down towards value area low and potentially down towards that minus development area? Now, keep in mind, I'm not expecting this to be a one-day trade. I think this would take multiple days if we're going to make it down there. And let's not forget, this could still be nothing more than a bull flag pattern that's going to resolve itself to the upside. Now, if you guys would like to learn how to stop blowing up your prop trading accounts, make sure to watch this video right here.